Welcome to the deep dive. Today, we're plunging into Alchemy Pay. It's a project aiming to bridge that gap, the one between regular money and crypto. That feeling when you just want to use your digital coins for like coffee, but it feels way too complicated. Alchemy Pay says it wants to fix that.
Yeah, it's definitely common frustration, a real pain point. And you're right, Alchemy Pay positions itself as this vital bridge. But what does that actually mean for you listening?
So our mission today is simple. We take all the info you've gathered, we do a deep dive into Alchemy Pay from the start to where they're heading, and really try to pull out the key insights, give you the full picture.
Okay, let's start right there. What's the actual problem?
Yeah.
I mean, why is using crypto sometimes so difficult that we need a project like this? What's the friction? Right. Well, it's really kind of a two-sided problem. So for traditional folks and businesses, sending money across borders is often crazy expensive. Seriously, fees can hit like 30, even 50% sometimes.
Yeah.
And the systems are all fragmented. They just don't connect easily. Imagine trying to mail something across town, but it has to route through 10 different countries first. It's inefficient.
Wow, okay. That's inefficient is putting it mildly.
Exactly. And then for crypto users and the businesses that might want to accept it, well, the tech barrier is pretty high for most people. Managing wallets, seed phrases, it's a lot. And for merchants, the big thing is volatility. If a shop accepts Bitcoin and the price tanks overnight, they lose money. It's a huge headache. They need stability.
So Alchemy Pay steps in how?
Their main goal. Think of it like a universal translator for money. Imagine your dollars or euros or maybe some crypto coin trying to talk to another currency that speaks a totally different language. Alchemy Pay wants to be that translator, making sure all your money, whatever form it's in, can just talk seamlessly.
Okay, I like that analogy. A universal translator. So it's basically making crypto feel like normal money day to day. Is that the main vision, or is there more to it?
Well, that's where it gets really interesting, actually. They started out as what you'd call a hybrid payment gateway, sort of a service layer on top of existing systems. But now they're shifting gears big time. They're transforming into a whole financial ecosystem. And the core piece of this is their own blockchain. A layer one, they call it Alchemy chain.
Layer one, okay.
Yeah, and it's specifically designed for super efficient stablecoin settlements. So this isn't just another app. They're building the actual road, the infrastructure for this specific type of digital money. It's a huge step up from just being an application.
Right, building their own highway for money, not just a car. Okay, that sounds massive. But practically speaking, how does this translator, this highway, how does it work? What could I, actually do with Alchemy Pay now or soon?
Great question. Let's break down the main pieces. First up, their on-off ramp. Think of it like a really user-friendly exchange counter. You can buy crypto or sell it using like over 300 normal payment methods, credit cards, bank transfers, mobile wallets.
It's like Apple Pay or Google Pay.
Exactly. Things like that across 173 countries. And it plugs into big platforms, Binance, Uniswap, different blockchains like Polygon, TON. So turning your bank money into, say, USDT becomes pretty simple.
Okay, that sounds useful. What else?
Then you've got the crypto card. This is probably the most direct way crypto meets your everyday spending. They offer virtual cards, physical cards too, partnered with Visa and MasterCard.
Some real cards.
Yep, real cards. It lets you spend your crypto holdings anywhere Visa or MasterCard works. So imagine paying for Netflix, or buying something on Amazon, or even groceries at Walmart, directly using your USDT. The system just handles the conversion to dollars or euros right there at the checkout.
Okay, that sounds convenient. How many people are using that?
They report over 500,000 users already got it through the Binance marketplace. So it seems to be getting some traction.
Right, and for businesses.
That's their crypto payments for merchants feature. Let's say you have a store on Shopify, and there are over 1 million of those. Alchemy Pay lets you accept crypto payments from customers globally. But the key is you, the merchant, get settled in your local currency, like dollars or euros.
So the business owner avoids the volatility risk.
Precisely. They get the benefit of reaching crypto customers without the price swing headache.
Makes sense. Anything else?
Yeah, one more interesting bit is the NFT checkout. Even for digital collectibles, they've simplified it. You can apparently buy NFTs using your regular credit card or bank account without needing to buy crypto first, trying to lower that barrier to entry again.
That covers a lot of ground. Okay, back to that new blockchain you mentioned, Alchemy Chain. You said layer one. Can you simplify that a bit more? What is a layer one for someone just trying to get the basics, and how does it change things?
Sure. Think of it like this. Most blockchains are like multi-purpose public roads, right? Cars, trucks, bikes, all sharing the same space. A Layer 1 blockchain is like building your own private, super-fast highway designed for only one specific type of vehicle. In Alchemy Chain's case, that vehicle is stablecoins digital money pegged to things like the US dollar.
Okay, a dedicated highway just for stable money. Got it. What makes it fast?
It's built using something called the Solana Virtual Machine, or SVM. Solana is known for being really quick and handling tons of transactions, so that's good for payments. And for validating transactions, they use something called Trusted Proof of Authority, or TPOA. Basically, a set of known trusted partners confirm the transactions. This makes it fast.
Trusted partners. Okay, we might come back to that. Any other cool features on this highway?
Yeah, one really interesting innovation they're touting is native on-chain currency conversion. Imagine you send USDC, which is pegged to the US dollar, right? Your friend is in Europe. With this system, they could potentially receive EURC, a euro-pegged stablecoin, almost instantly. The conversion happens directly on the blockchain itself.
Whoa, really? Without needing a separate exchange step?
That's the idea. It could make international payments incredibly fast and simple, cutting out middlemen.
And the ACH token, where does that fit in?
Right, the ACH token. On this new Alchemy Chain highway, ACH becomes the native gas, like the fuel or the toll fee you pay to use the road. Every transaction on Alchemy Chain would require a small amount of ACH.
Okay, so using their system, especially the new chain, relies on the ACH token.
Exactly. It becomes central to their ecosystem.
So let's tie this all together. What does all this tech, the ramps, the card, the new chain, what does it actually mean for you listening at home? What are the big upsides?
Okay, yeah, the so what factor. It boils down to a few key practical benefits for you. First, just unprecedented convenience. They're trying to make interacting with crypto feel easy, familiar. Removing those tech hurdles we talked about, use crypto like normal money.
Like using that card anywhere.
Right. That leads to the second point, global spending power. That crypto card lets you use your digital assets for everyday stuff anywhere. Visa or MasterCard is accepted. Think Amazon, Apple Music, Netflix, eBay, your local supermarket.
Okay, that's pretty powerful.
Third, if you happen to be a small business owner, it offers smoother business operations. Accepting crypto becomes potentially less risky because you get paid in fiat, and it could open you up to a whole new global customer base.
Right, tapping into the crypto economy without the volatility risk.
Exactly. And finally, thinking bigger picture, especially for cross-border stuff, it's about reduced costs and delays. The goal is to significantly cut down those massive fees and long waiting times you see in traditional international bank transfers.
That all sounds really positive. You also mentioned something that stood out earlier, their approach to regulation.
Ah, yes, that's a really interesting angle here. They seem to be taking a regulatory-first approach, which is pretty different from some crypto projects. They've apparently been quite aggressive in getting licenses. The sources say they hold 10 money transmitter licenses, MTLs, just in the US, plus licenses in the UK, Australia, Canada, Switzerland.
10 in the U.S. alone. That's a lot.
It is. It positions them as a much more compliant player, which could be a big advantage, especially as regulations tighten globally.
And partnerships. You mentioned some big names.
Yeah, they're not partnering small. We're talking Visa, MasterCard, Binance, Shopify, even Ripple. These are heavy hitters.
Yeah.
Having these names on board isn't just for show. It means real technical integrations and, crucially, a level of trust from established global companies.
So Visa and MasterCard actually recognize them.
Apparently so. Recognized as a trusted payment provider. And they integrate with something like 200 banks in Europe, too, including big ones like BNP Paribas and HSBC. That level of integration is significant.
Okay, this picture is, well, it's incredibly ambitious. Building a whole new blockchain, tackling global payments, getting all these licenses and big partners. It sounds almost too good to be true. So there must be challenges, right? What are the potential downsides, the red flags you should be aware of?
That's a very important question. And you're absolutely right. No project this big comes without hurdles. And the sources we looked at definitely point out some significant ones. First off, there's massive execution risk with Alchemy Chain. Building a brand new Layer 1 blockchain from the ground up is, well, it's a monumental task.
It sounds it.
Yeah. Whether they can successfully launch it, scale it, keep it secure, that's a huge if. Any major delays or worse, security problems could seriously damage confidence in the whole project.
Okay, that's a big one. What else?
Remember that Trusted Proof of Authority, TPOA, mechanism for their chain.
Yeah, the trusted partners validating things quickly.
Well, the flip side of that speed and regulatory friendliness is centralization concerns. Having a small, pre-approved set of validators control the network goes against the decentralization ethos that's core to a lot of crypto.
So crypto purists might not like that.
They might not. It's a trade-off. They're potentially sacrificing decentralization for speed and compliance. That could be a turnoff for a significant part of the community.
Fair point. What other challenges?
High competition. I mean, the payment space is absolutely brutal. It's packed. They're not just competing with other crypto payment folks like BitPay or MoonPay or even Ripple and Stellar
Yeah.
in the cross-border space. They're also up against traditional FinTech giants. Think Stripe, PayPal, and those guys are moving into crypto too.
So they're fighting on multiple fronts.
Exactly. It's a very crowded battlefield.
Okay. Anything else? Regulations seem like a strength, but is there a risk there too?
Yes, absolutely. While they're proactive now, there's still significant regulatory uncertainty, especially around stablecoins. Alchemy Chain is betting big on stablecoins. If major economies like the US or the EU suddenly decide to crack down hard on private stablecoins, well, that could pull the rug out from under their core business model. It's a moving target.
Okay. That makes sense. Are there issues with the token itself? The ACH token?
Now we get to what is perhaps the most glaring weakness highlighted in the sources. Critical transparency issues with the tokenomics.
Transparency issues? How so?
There's a major discrepancy, and it's unexplained in the reported circulating supply of the ACH token. If you look at CoinMarketCap, it shows around 8.9 billion ACH. Look at Dropstab, it's closer to 9.5 billion. But then CoinGecko reports way lower, under 5 billion.
Well, that's a huge difference. Why?
CoinGecko says they exclude locked tokens, but the overall lack of clarity and consistency across major platforms is a big problem. It makes it incredibly difficult for you, as an observer or potential investor, to figure out the project's actual market value.
Yeah, how can you value something if you don't even know how many units are actually out there?
Exactly. It seriously undermines trust. It's like trying to figure out a company's stock price, but nobody agrees on how many shares exist. It's fundamental information that seems unclear.
That sounds like a serious red flag.
It is. And adding to that, there are ongoing token unlocks. The sources mention that roughly 84 to 85 million new ACH tokens are released every month.
Every month.
Until when? Until 2026, apparently for rewards. Now, this constant new supply hitting the market, it could create downward pressure on the price if demand doesn't consistently grow to absorb it.
More supply potentially pushing the price down. Okay. Any other concerns?
A couple more technical or operational points came up. One is limited public development activity. Unlike many open-source crypto projects, their public code repositories, like on GitHub, don't show a huge amount of activity. This suggests maybe most of their development is done privately, or it's more focused on integrating with partners rather than building core open-source tech. Either way, it reduces transparency for developers who want to see under the hood.
Less visibility into what they're actually building.
Right. And then there's the issue of self-reported metrics. Many of those impressive numbers, 2 million merchants, 3 million users, 8 million transactions, seem to be self-reported by the company.
Yeah.
It's often difficult to independently verify these kinds of user metrics in the crypto space, which just adds another layer of questioning about their true scale and adoption.
So we have to take their word for it on some of those big numbers.
To some extent, yes. And one final, slightly weird point, branding confusion. There's actually another well-known company in the Web3 space called Alchemy Platform. They do infrastructure for developers.
Oh, I think I've heard of them.
Yeah, they're pretty big. Having two alchemies in the same general industry definitely creates confusion. It makes it harder for you to track news or understand which company achieved what.
Okay, so summing up the risks. Huge challenge, building the chain, centralization worries, fierce competition, regulatory unknowns, major questions about token supply transparency, ongoing token releases, maybe less open development, self-reported numbers, and brand confusion. That's quite a list.
It is. It paints a complex picture.
So where does that leave us? What's the bottom line here? Alchemy Pay seems like this fascinating paradox.
That's a good way to put it.
Right.
A paradox. Because on one hand, you absolutely have a highly experienced team, people with backgrounds in traditional finance giants like MasterCard and PayPal, but also deep crypto knowledge. You have those really strong partnerships, Visa, MasterCard, Shopify, Binance. That's undeniable clout. And you have that commendable regulatory first strategy, getting all those licenses. Plus, the core vision for Alchemy Chain as this specialized stablecoin hub, it's genuinely ambitious and potentially very powerful.
Okay, that's the strong positive case.
But then, on the other hand, those critical transparency issues, especially around the ACH token supply, are just impossible to ignore. They cast a real shadow. Add to that the sheer difficulty of executing their Layer 1 plan, these centralization trade-offs with TPOA. It creates significant hurdles and a lot of uncertainty for anyone looking at this project, whether you're a user, a potential partner, or an investor.
It really sounds like a project just brimming with potential, but shattered by some really serious questions that absolutely need clear, transparent answers. This is a great point to quickly pause and remind our listeners of something.
That's right. If you're enjoying how we break down these complex projects into simple pieces and want more reviews just like this, make sure you subscribe to our channel, CryptoBox. We do all the complex research so you don't have to.
Okay, so back to Alchemy Pay. This deep dive has certainly been, well, eye-opening.
Indeed. It's clear the project's future really hangs in the balance. It depends heavily on their ability to actually deliver on that ambitious tech roadmap for Alchemy Chain. And they need to successfully navigate those shifting regulatory waters, especially around stablecoins. And crucially, they have to address those transparency gaps, particularly with the tokenomics, if they want to build broader market trust.
That transparency piece feels key.
It really does. Ultimately, Alchemy Pay is making a big long-term bet. They're betting on the idea that traditional finance and decentralized finance are going to merge, to converge. But for you, listening right now, the critical question really remains, can a project with such a compelling vision, such strong partnerships, overcome these significant transparency problems? Or will Alchemy Pay end up being a bridge that looks impressive, but feels just a bit too shaky to fully cross with confidence?
That's a really powerful thought to leave you with. Keep exploring these projects, keep thinking critically, and thanks so much for joining us on this deep dive today.